Hi, I'm Meta Spencer, and today we're going to go to Edinburgh, Scotland, where I have never been before. And we're going to meet somebody who's an insurance expert. And that's about all I know about him. His name is Sandy Trust, and he and my friend Robbie Tulip, who is in Australia, by the way, have something in common, I think. Both of them are worried about climate and the way the insurance industry is affected by, and in turn should affect policies regarding climate. So that's what we're going to talk about today, the importance of insurance when it comes to climate change. So, hi, Sandy, how are you?
Good afternoon, good evening.
Yeah.
Yes, very well, thank you. So thank you for the invitation to be here.
Yeah. And Robbie, hi.
Yes, it's such a pleasure to meet Sandy, and I've followed his work together with Exeter University and the Institute of and Faculty of Actuaries in the United Kingdom for some years. Introduce your report, Parasol Lost, which of course is a play on words from Paradise Lost, to the great epic poem from John Milton. A recovery plan needed for the planet, global risk management for human prosperity. It's the fourth report in a series. The Emperor's New Climate Scenarios from 2023, then Climate Scorpion, this thing is in the tail, another nice play on words, and then Planetary Solvency, Finding Our Balance with Nature, Global Risk Management for Human Prosperity. It's really, I think, a really important series of reports. And Sandy, could I just ask you to reflect on this series of reports and how it's how you've come to produce them?
So let's go back about a decade. With the UK actuarial profession helped Sir David King, Chief Scientific Advisor to the UK government at the time, to produce what astonishingly was and is the first and only global climate change risk assessment. And in Downing Street, the conversation went something like this: if we don't get India and China going on climate change, we are toast. How are we going to do that? Well, we need to do a risk assessment, not a science assessment. I'll get into that in a minute. And we need to have what is risk. Risk is quite simple, really. Imagination about what could go wrong and take action if you don't like it. A best guess about the worst case. So at that time, I think I'm right in saying David Cameron, then Prime Minister of Great Britain, I think I'm right in saying, was famous for saying, cut the green crap, but at the same time, with Sir David King at Cyber Sharp, he was funding a multi-billion pound risk assessment exercise with China, India, the US, and Britain. And I met the good fortune to, so firstly, that report changed my life. I read that paper and it became immediately clear we were in much more trouble than people thought we were. And just one really simple example, carbon budget. So when those carbon budgets were set, they only give many commonly used carbon budget a 50% or 2/3 chance of success. Now just reflect on that for a second. Would you get into an aeroplane if it had a 50% chance of getting to its destination? Would you cross a road if it had if you had a 1/3 chance of getting run over? Like, you never would. Fast forward to 2021, we met Sir David King. I said, well, maybe we could do a report. And he was so excited about working with actors, and I thought he'd maybe misinterpreted us for actors or something. I'd never met someone who was so enthusiastic about actuaries. So we did a paper with Sir David, and then we went to the first Tipping Points conference with Tim Lenton at Exeter. Spoke with Tim post the conference and said, well, maybe we could do a paper with you. And at that point, the task force for climate related financial disclosures had been adopted by financial institutions. It was coming up with implausibly small estimates of what climate change would do to the economy. So we did a paper with Tim. But then there's such an important topic, we just have to do another paper, is how sensitive is the planet to greenhouse gases, because that drives carbon budgets, that drives how much we can safely emit. And we wrote about that in Emperors. We wrote about it again in Climate Scorpion. We wrote about it again in Planetary Solvency. And then we had to devote a whole paper to this topic because it's still not being picked up. Mm-hmm. If we double greenhouse gases, we get to 3 degrees Celsius. But also there's quite a high chance it's more sensitive. And what do I mean by high chance? Nearly 20, I think about a 20% chance it's greater than 4.5 degrees, according to the models. So let me unpack that a little bit. Well, first, most people wouldn't play Russian roulette. So that's a higher chance than losing Russian roulette. There's a very high chance of failure. And if you think about that for a minute, the difference between 3 degrees and 4.5 degrees, this is hugely consequential in terms of how much warming we might have locked in. This is radically uncertain, considering the stakes. And the next question, of course, is, well, we haven't doubled greenhouse gases, so we're not yet on course. But there's a broad range of uncertainty, right? And it might be 4.5 degrees. So when it comes to climate change, and you have a 20% chance of climate sensitivity being at the high end, that's unbelievably high in comparison to all the rest of the things we accept. And so back to that measure of sensitivity, 3 degrees and 4.5 degrees, if we double greenhouse gases. Well, then the question is, when are we going to double greenhouse gases? So the answer is we've almost doubled greenhouse gases already. Yeah. We've almost doubled greenhouse gases. Plus, as I'm sure many of your viewers know, we're doing lots of other things which are likely to increase the rate of warming, deforestation, ice is melting, big wildfires. We're still emitting, greenhouse gases are still increasing. So to all intents and purposes, we've effectively doubled greenhouse gases. So that sensitivity, where we're headed to, 3 degrees or 4.5 degrees, well, we might already be at that point. We might already be en route for 3 degrees, or even 4.5 degrees, or possibly even more at today's level of greenhouse gases. And that's a stunning finding.
And so, Sandy, if it suggests that we've already blown the carbon budget, which I think is what climate scientists like James Hansen are arguing with he's been one of the leading analysts of this higher sensitivity argument I want to go back into some of the detail of your Parasol report, and but first I just wanted to go to this chart from Munich Re, who is a reinsurance company, and I found it really interesting in the context, because what it is, it's about the like we just look at the insured losses from climate-related events in the world. Back in the 1980s, it was in the sort of low tens of billions a year, very, very affordable. But when we go forward to now, it's regularly over 100 billion. It's pushing up to 200 billion. Could you just comment on how this data is exercising the minds of the insurance industry?
I guess it's start with capital. So insurance companies are profit-making entities. They're very good at managing the risk on their balance sheet. They're very well capitalized. So Munich Re and that data, I wrote a blog on this last year actually. Aon, Swiss Re, Munich Re, Zurich, they're all publishing reports saying versions of this, that climate-related losses are increasing roughly 5 to 7% a year, so maybe doubling every decade currently. Is this a problem for the big reinsurance companies? No, not yet. It might become a problem at some point in the future, but they're very good at managing risk. They're very good at modelling. They're very good at pricing. So if the risk increases, they increase the premium a bit. They have to hold a bit more capital, but they do it in a way that's profitable. So the big reinsurance, big global reinsurance companies, I think have, I think it's fair to say, all published reports that tentatively say, look, this problem is coming and it's getting bigger.
But it's certainly a problem for those people who are experiencing the catastrophes that are.
Oh yeah,
and for the people who find it difficult to get insurance or find insurance very expensive.
Yeah, I mean, and just to finish on the industry, so I think this week, maybe last week, the Association of British Insurers wrote to the UK government and kind of said, we need to have a chat about this. This is not getting a great direction. So either the insurance becomes too expensive, people can't afford it, or the insurance company just says, I don't want to write insurance, it's too risky, and then the state has to step in. So what you're going to see, and already are seeing, is climate insurance ghettoisation. There are bits of the country where you just can't get insurance. And if you think about property, residential property, there are maybe at least 4 parties interested in the insurability of a house: the insurance company, the mortgage company, the homeowner, and the real estate person. And currently, you're going to get risk arbitrage. The insurance company has probably got the best understanding of the risk on that property. The homeowner may or may not, depending on if they've been flooded. The bank might well not understand the risk because they're not looking at it as regularly as the insurance company. The real estate company, who can say? So yeah, there's a real problem building up here, and at the root of this is the difference between backward-looking risk models and prospective risk models. So historically, you would say, how often, what's the rainfall pattern? How often does the river flood? This is the flood risk to pick a particular hazard for this property in this area, and you'd be relatively confident now. But climate change is warming up the atmosphere. That both sucks up more water from the ocean and some places and then dumps it in other places. So the hazard distribution is shifting. So we're getting not just heavier downpours, but also unprecedented rainfall events.
Let's focus in on some of the analysis in your Parasol Lost report, and I'll just share the screen of your table of contents, and so.
Yep.
Just going through this, the key, and these are things that you've been alluding to in your comments so far, that emissions with warming accelerating past 1.5 global catastrophic risks. Now, proximate, that means, I suppose, emerging. And this concept of a planetary solvency recovery plan is a really interesting theme that you've gradually developed through your series of reports. So, planetary stability standards, this concept that you've been discussing of an actuarial review of climate sensitivity is a really important recommendation and finding. And so that climate change is a risk to planetary solvency is a key theme for the insurance industry in terms of risks of higher warming and tipping points. Mitigating climate change is critical to support future growth. Now, there's a big debate about these concepts and unmitigated climate change as a risk to planetary solvency. And so developing a planetary solvency recovery plan then leads to these concepts, a mindset shift about people thinking, defining quick wins, supercharging the transition, and working with nature and emergency brakes. So I find this a really valuable analytic framework to understand climate policy. And
just to finish off on that insurance point. So what I think may happen is that you'll see insurance companies start to introduce forward-looking risk models. So anticipating the arrival of the basketball players, although you get sudden shifts in insurance premiums, and banks may follow. So you can see there's really potentially quite significant financial stability risks. Climate risk models are both underestimating risk, but also not capturing the systemic connections between risks. So to go back to that solvency plan. So
I guess what you're saying is somehow the insurance companies are basing their anticipation, their projections of the future, on faulty estimates. Is that the bottom line? Or if not, why is there a problem? I could see if there's a problem if they have to charge too much, because then you have, I guess you're saying planetary insolvency. But if you, I guess I'm still trying to imagine what is the basic problem there. Why aren't they foreseeing the catastrophe that everybody else can see is looming?
I don't think it's fair to say they're not foreseeing it, but it's not relevant in the timescales that they run their businesses on. So most hazard insurance is a 1-year policy. So you write a 1-year home insurance policy or 1-year natural catastrophe policy, whatever it is. So really you're pricing risk only over a relatively short time frame. So even if you can see big risks in the future, like there have been several insurance companies who've talked about big risks in the future, that doesn't mean that you're going to price the risks today. So insurance companies, I think, some insurance companies have a very good understanding of climate science, but they're operating on a 1-year time frame. They have ability to write business, not write business. They have ability to increase premiums, reduce premiums. So
excuse me, but I have heard that there are some people, especially I believe in California, they can't afford their insurance. They're already, in other words, the price has already gone up so much that ordinary people are moving to Texas. I don't know what that means, but because I think it's going to get hot in Texas too. But maybe the insurance rates are not as high there, and that there is maybe you don't think there's a connection between those, but isn't it even now the case that people are finding that the insurance rates are going up? and would have to, if I had a house, I'm in a forest right now, in a dry forest, and I have friends who have houses under the redwoods, and this becomes quite worrisome already, right? Or not?
Yeah. So we've got kind of three topics which we're talking about. So
Mm.
let's talk about people purchasing insurance. So we've got kind of planetary climate change, the implications of some of those assumptions being wrong in terms of rates of warming, and the things which might happen. The insurance companies looking after their balance sheets and their profits, and then customers needing to buy insurance. So absolutely, both Florida and Canada are seeing very significant hikes in insurance rates and the withdrawal of insurance from some properties or some regions, and that's because the insurance company is looking at the wildfire risk, the flood risk, the hurricane risk, and saying this is a big risk in this location, so we're going to price the premiums very high, and people then are in a very difficult position. Either they have to pay a lot for insurance, or they can't get insurance or can't afford insurance, or they have to sell the property, but the property is then devalued because it's risky and it's difficult to get insurance, and or it's difficult to get a mortgage. So yeah, that's a very difficult situation. I think in Britain, I might get the statistics slightly wrong, but it's something like 1 in 6 or 1 in 7 properties are at risk of flooding today, but that increases to 1 in 4 properties in the future if we don't mitigate climate change.
Why aren't insurance agents out in the street with placards saying, help, help? The end is nigh.
Oh, why aren't they? Excellent question. I don't know. I mean, this since I read that report in 2016, this has been my, easily, obviously, the most important topic I need to work on. I think there's a mix of factors. I think one, the reductionist Western mindset. So financial services, you may hear financial services talking about the real economy as if it's a separate thing. And frankly, not all financial institutions want to hear this. Capitalist entities. But I agree. And like maybe the last point, there is, unless, in my experience, unless
This is where your planetary solvency report series is so helpful, Sandy. Do you mind if I go back to your solvency plan? I'm actually particularly interested in what you've defined here as the emergency brake, and to research and investigate deploying technological solutions to rapidly reduce Earth's energy imbalance, reduce warming, and mitigate the risk of tipping points. Because my sense is what you've just been saying about how people within the insurance industry and I think more broadly within the capitalist system are not really trained to engage with all of these with a mindset shift and and supporting all of these agendas, and so we're sort of drifting towards some sort of disaster. But like the question is, what's the feasibility of, of getting industries like insurance to engage on these topics?
yeah, just a small question. So look, I think there are 3 steps. Simplifying, realistic risk assessment. And I use this, I'm aware this is a sensitive analogy, but financial services, broadly speaking, haven't yet got the cancer diagnosis. This is business as usual. The weather's changing. It rains a bit more, but you know what? It's the weather's always changed, right?
Mm.
So we need to get realistic risk assessment, and then that needs to drive changes to the mindset, the way we allocate capital, the way we price risk, the way we view nature, all that kind of stuff, and crucially, what we price and what we value. You know, the AMOC, the Gulf Stream in colloquial terms, the massive global ocean current circulation, which keeps northwest Europe warm, has zero value. Zero value, right? That's not valued, not seen. So realistic risk assessment, capital reallocation, and then we also, and I think this has maybe been missing a bit from quite a lot of the dialogue, we need a positive vision for the future. What are we working towards? Clean air, a stable climate, a thriving biosphere, nature. You know, there's so many positive choices we can make, but that's
If I were to go buy a house now, and I would be affected by the interest rate, the mortgage rates. Now, to what extent are the mortgage rates pegged in relation to the insurance risk? Are the insurance actuaries operating completely independently from the people, with the money? And do these things, are they linked in some systematic way so that to understand the reaction of the insurance company, or the banks, I would need to know how the other guys are seeing the world.
Yes. So I did a roundtable last year for the UK Climate Change Committee. I brought together banks, insurance companies, investors. So they all have physical risk models. They're all running analytics, but they're not getting the necessarily consistent information. So different model providers are giving different information. So the insurance company will have a view of the flood risk on a property. So will the bank, but they're not necessarily consistent. The real estate salesperson may or may not have that information. Ditto the homeowner. So what the current state of play is they're inconsistent.
But a connection does emerge in that if you can't get insurance, it's often difficult to get a mortgage. And
Yes.
and so if the insurance industry has retreated from a market because of, for example, of high fire or flood risk, then there are many places where people have traditionally lived that are looking less viable. So, like here in Australia, there's been quite a debate about the city of Lismore because they've had massive floods that have just totally devastated the town centre, and so people are saying, well, perhaps we're just going to have to move the town, or abandon the town. And similarly, in California with fire risk, there are places, and then the slower problem of sea level rise, like if sea level rise actually is accelerating and uh, faces the risk of suddenly accelerating faster, then notably regions in Florida and there are many
Yeah.
low-lying regions of the world where as sea level does continue to rise, the insurance companies will start to say, "Well, no, I'm not going to insure you against the storm surge. That's the first
Yep.
indicator of sea level rise." And then the banks will say, "Okay, well, if you can't insure it, we'd be mugs to give you a mortgage if the property's going to be washed away."
So
Yeah.
what does happen for the most part? If somebody tries to sell their house and they can't because can afford or they can't get insurance on it. What do they do? What do most people do now? And why aren't they out in the streets?
Yeah, I don't know what everybody's doing. If you just Google Florida home insurance withdrawal, you will get plenty of stories about people who can't get insurance, can't afford the insurance, see the value of their property plummeting, and they're stuck. Either they have to sell it to someone for a massive loss, or they sit it out till another event happens. They're stuck. Potentially, the state moves in. There was a situation in Britain recently where a row of houses was bought by the council, and they moved people out of them because it was cheaper to do that than to try to build up the flood defences. But you are already seeing the beginnings of what would we call it, kind of property value driven climate migration.
Okay, and okay, now we'll go back to this basic question of psychology, the denial of reality, or somehow, I don't know what you want to call it, but
No, it's particularly interesting in the United States, where Governor DeSantis in Florida is a climate denier, or that's how his critics characterize him. And and Mr. Trump has systematically removed discussion of climate from much government departments, and yet so I find it actually really fascinating, Sandy, that that we have this psychological reaction, as Matter pointed out, that there's basic information there that you're sharing, but people seem to put their head in the sand and don't want to know what's happening.
Is there any,
books.
excuse me, but is there any historical precedent for this? Was there ever a time that you know of when the whole population and the whole industry of real estate or the banking funding and so on, where the actual investments that people were making turned out to be irrational because they simply were not taking account of certain predictable risks? Is there anything else comparable to the denial of climate? Has there ever been a denial about, I don't know, say if you're in the Netherlands?
Sandy used the example of the global financial crisis in 2007-08, where he mentioned earlier in the conversation the subprime mortgage crisis, where there was quite a irrational exuberance in the finance sector, but Sandy, what's your response to Matter?
Yeah, I mean, I think there's a lot of books being written on this, but this is Willful Blindness by Margaret Heffernan. And if you go through human history, there are just countless examples of, particularly if a topic challenges the status quo, it is rejected and ridiculed, and then sooner or later it may get brought in. So hand washing in medicine was rejected and ridiculed for a long time. They used to do in utero fetal x-rays, and then a researcher said, I think this is causing childhood leukemia, and she was ridiculed, and it took them a quarter of a century to stop doing in utero fetal x-rays. So Galileo famously said, hey, guess what? We go around the sun, so any new idea is fiercely rejected by incumbents. And my kind of, and I'm conscious when I quickly cover the planetary solvency recovery plan, my quick take on this, particularly with American business, is American business has become very adept at protecting its interests. And there's a playbook which was pioneered by the plastics industry post World War II, I think in the 50s. I think in Congress, I think someone said, this plastic is great, but what are we going to do with it? And the plastics industry went, this could be a problem. So they funded some nice sounding NGOs like Keep America Clean and did a bunch of TV adverts of Native Americans crying at hamburger wrappers going down the river and stuff. And they successfully landed the narrative, this is about recycling personal lifestyle choices and not plastics as a systemic problem. Tobacco, obviously, very famously, derailed any meaningful action on smoking. The oil and gas industry, a huge part of what we see.
So, Sandy, let's focus on the solvency plan. And I'm particularly interested in your thoughts on the ability to engage industries who might be able to advocate for better public understanding on these points.
Well, I think first to just touch on the recovery plan. We are very focused on carbon and energy and transportation. The emergency rates you picked up. Well, let's just touch on the parasol. What do we mean by the parasol? Well, sulfates in particular act as a little sun shield. They reflect sunlight and they help clouds to form. So aerosol cooling from sulfates has cooled the planet by about half a degree. So we're at 1.5 degrees. We'd already be at 2 degrees without the sulfates, right? This is massive. And if you look at the error margins, it might be even more. We might have had as much as 1 degree of cooling from sulfates, which we lose as we reduce the pollution. So that's perhaps lost. Now, quoting, you mentioned James Hansen earlier. I think I'm quoting James Hansen. And he said, think about that for a second. We've been putting pollution into the atmosphere, and that's acted as a half a degree or more of cooling. So to quote Hansen, we've been geoengineering the shit out of the planet already. We've just not been recognising it as such. Mindset has been we make progress, we make GDP, we make profit, we make new technologies, and then unintended consequence of that is global warming. Well, we need to shift that mindset, recognise we might lose this aerosol cooling, but also, and I'm not advocating geoengineering, but I am pointing out that we've been doing this globally at scale through shipping and other pollution, and we know what the impact is. What are the consequences if we keep going above 1.5 degrees and into tipping points? What are the consequences? And this, I think, is huge, because I think this stuff is not in the cone of people's plausible futures. So let me just talk about AMOC collapse quickly. So the AMOC is part of the Atlantic Ocean circulation. What we in Britain know as the Gulf Stream transports huge amounts of heat up from the Caribbean up the east coast of America and keeps northwest Europe cool. And then that
warm. Keeps it warm.
Keeps it warm, sorry. Then that warm water cools in the Arctic and goes back south. It's a huge current. And those big currents give us all our nutrients from the deep sea, and they're critical for regulating global temperature. The AMOC could collapse in a decade or two. The AMOC is unstable. What's the right answer? Well, what the world is scientists are uncertain, but what's actually happening is you have two or more groups of scientists defending different model architectures. One model architecture has stability built in. One model architecture has instability built in. We don't have a long data series. We don't really know. But we do know that it's slowed, and the only cool spot on the planet is in the northeast Atlantic from that current slowing. So then the question is, so what? What if the AMOC does collapse? Does it matter? Well, there was a great paper I'll just get the title for you.
And
Okay.
yes, here we are. Good.
This is January sea ice extent with the ABOC switched off. And what you can see, that black line, you can see ice coming right down to Scotland. And the red line further down even to England. Yeah? And
So that blue line is ice flowing?
Ice. So
Is that Greenland over there? No.
This is Greenland, the big bit. Iceland.
In the middle. Well, what? I'm sorry. Where's the ice coming from?
The ice, the polar sea is
From the North
melting
Pole.
because you're losing the heat from the ocean current if you switch the AMOC off.
So the consequence is that that Northwest Europe, including Iceland and the Nordics, would freeze, and all of that heat that is currently coming from the tropics up to keep Europe with its balmy climate would stay in the tropics or go to the south and would superheat the tropics. So it would be a catastrophe for agriculture and livability of Northwest Europe. And the government of Iceland has declared this a national security concern, very interestingly. And yet, sorry, Sandy, if I can just
No, please.
There is a very large and well-funded lobby that says we must do nothing about it. And this is an NGO lobby. They're saying if we just try to focus on shutting down the fossil fuel industry, then that's the main agenda. And even though the planetary albedo, that is the reflectivity of sunlight to space, has been falling, we must not intervene at all with these emergency brake technologies that Sandy discussed as geoengineering. And so there's this call for a non-use agreement. And yet it's like, I know, Sandy, you said you're not advocating for geoengineering, but I am. Like, I think it's urgently needed, because in terms of this emergency brake context, when you've got this sort of Russian roulette type of risk of Europe becoming unlivable, the idea that you would not even research the only thing that might be able to prevent that is really quite culpable, in my view.
And what we've tried to do is present it from the perspective of risk. So this is a risk to what we call planetary solvency, the ability to maintain a livable planet for the number of people we have. And if the AMOC switches off, as you've very eloquently articulated, we're literally redrawing the map of human survival. We're talking about Edinburgh having a climate like Moscow. We're talking about a significant collapse of agriculture. We're talking about, as you say, the superheating of the tropics. We're talking about the cessation of nutrients from the deep ocean for our fish. All the fish that we catch comes from deep ocean current nutrients coming up, essentially. And this is what we mean by a risk-led approach. We need to have a rational, cogent discussion about the level of. But it's pretty difficult to see how we can be comfortable that this won't happen unless we make some form of intervention.
Oh, okay. Well, now he just did. Robbie just said what he's all for, and I have to, say that's my orientation as well. That albedo is. And I think if you look at what James Hansen is saying, he's recognizing it too. Albedo is a very important determinant of this. I think you're pinning everything on the AMOC, but the question is.
No, he's just using it as one example, Mesa.
Okay.
There are a number of tipping points, and Sandy's been working with the Tim Lenton, as he mentioned, at the University of Exeter, just identifying all of the tipping points. My analysis of that is that there are other themes. I'm particularly interested in the loss of clouds as a possible tipping point, because the big tropical cloud banks over the world oceans have been dissolving, or just slowly losing the amount of sunlight that they reflect. And so what we're seeing as the ocean warms up, there's there's this range of impacts on ice, on forests, on various things. But it may be that the AMOC collapse is the most proximate, to use Sandy's term, um, climate tipping point.
It's particularly pertinent for the UK and Northwest Europe. How proximate is difficult because we don't know. But what we do know is we're 1.5 degrees, the temperature's increasing, the rate of warming is increasing, and that's causing massive melt of the Greenland ice sheet. As it melts, it lowers in height, and so the rate of melt increases. So we know with certainty that a pulse of disruptive fresh water into the North Atlantic is increasing. So like we know with certainty it's increasing. We're still not taking action to reduce that. So with no climate model, no AMOC model, and very light knowledge, I can confidently say the consequences could be catastrophic. It could be decades rather than centuries. We don't need it to collapse fully to have very significant implications. And our current behaviour is that we are seeking that risk. We are taking action to accelerate and bring forward and make more likely that to happen. And the AMOC does very AMOC significant regional collapse would really impact Northwest Europe, but also East Coast America, because it sucks effectively a huge amount of water away from the East Coast. So some scientists think if it shuts off, or if it's weakens significantly, you could get up to 1 meter of sea level rise on the East Coast of America, because it's not sucking all that water away. No one's talking about that.
So, Sandy, what I'm interested in is the prospect of getting the insurance industry to talk about these issues a bit more, and to perhaps take on board the findings of your planetary solvency series, and do something to counteract this big lobby that's calling for us to do nothing about it. And so. The way I view it is I really like the Montreal Protocol because it was a narrow technical agreement on ozone that was supported by the conservative side of politics, by Mrs. Thatcher and Mr. Reagan back in the 1980s. And we've got this terrible polarization around climate. And so I think a lot of people in the insurance industry, they say, well, they're more friends with the conservative side of politics than the progressive side, and the conservative side tend to discount climate risk, and yet your parasol and solvency findings are showing that that's bad for business, and that they face significant commercial risk emerging. If the costs of climate disasters double again from 100 billion up to 200 billion, that does become a significant commercial risk, not just for insurance, but for all of the people who need insurance.
There's a lot in there to unpack. So is the industry starting to message on this, what's called, you could say, the protection gap, or the increasing risk of uninsurability? Yes. Do you have a letter? I'll send you the link. A letter just last week, which is signed from maybe 10 insurance companies to the UK government, highlighting the risk of uninsurability. The NGFS network for greening the financial system is a network of international banks and regulators that effectively sets global climate change risk analysis.
Let me interrupt, because you just said the word I wanted you to hear: international. See, I kind of think the question I wanted to ask was, to what extent are these decisions made by national governments and the institutions that are governed by national governments? And to what extent is there some sort of international um, dynamic where the financial, the banks, and all that, as well as the insurers. To what extent is that international? Because if you could show that really the decisions have to be made by this international body, and you can forget about trying to dicker with Trump, for example, because you'll never get anywhere with the U.S. government right now. But if there's a dynamic going on internationally, where then that's the what you want to ride, isn't it? Isn't that what you want to jump out
Correct.
to?
Yes. And so there are two sides to this: decarbonisation, net zero, and that stuff has mostly been torpedoed by Trump, and then the risk piece. So, what are the risks? Because you have to understand the risks in order to take action, right? And for me, tipping points are the big risk. That's the point of no return, very non-linear impacts, high consequence, etc. So the NGFS network for greening the financial system is an international collaboration of
What
central
is that?
banks.
NGF. What is that?
NGFS, the network for greening the financial system. So that is a collaboration of central banks and regulators. So they kind of set the standards for climate change risk assessment globally across financial services. So that's a good thing, you would say.
Yeah, those are the guys I need to interview next week.
So let me tell you a little story. So I spoke to an economist pre-Christmas. I can't mention names, but a globally respected economic institution had been asked by a big name philanthropy, household name philanthropy, to build the business case for adaptation. How much was climate change going to cost the global economy? Done this analysis, we've looked carefully at the economic impacts of climate change. We've taken into account 200 studies. We've carefully calculated the average. And I said, oh, what's the answer? What's the economic impact of climate change? They said 9%. I said, oh, what, a 9% smaller economy by 2050? No. 9% less growth. So rather than having an economy rather than having an economy 210% of its current size, we'll have an economy 201% of its current size. So very marginal. And I said this, respected economist. So, what's your with the economic studies you assessed? How did you check what they were taking into account? Were they capturing tipping points, for example? I mean, we didn't. That's not our job. We just take the average. I said, oh, right. So, because as an actuary, you have to justify your assumptions. And I said, so tell me about the economic growth assumption. Why are you assuming ongoing economic growth given the very serious warnings from science? Well, that's our starting assumption. The economy is always growing, therefore it always will.
Oh boy.
Yes.
Boy.
So, and I quote the NGFS themselves. These are not my words. This is in the NGFS documentation. A global economic recession caused by climate change is not foreseen, even in the worst case scenario. Physical climate risks are not exhaustively modelled. Sea level rise and ocean acidification is excluded. Tipping points are excluded. There is no allowance for conflict or migration. Nature-related risks are excluded. Human health impacts are not covered. So here is the very big problem. The NGFS, Network for Green Financial System, is excluding all the big risks, and its starting position is economic growth will continue.
Mm-hmm.
Well, we should start to wind up, Meta, and
I know. I don't want to wind up because this is the crunch.
that's right. Yes.
There's a label in that you've been showing about the emergency reaction. What do we do? And at some point, maybe somebody will say, maybe this is an emergency and we ought to do something. What is your game plan? I mean, Robbie and I both have a game plan. We want to start focusing on albedo because that's quicker to handle than carbon removal. But that's a quick summary. But I think it can be done. What's your game plan?
Great question. Yeah, I mean, I think I go back to that realistic risk assessment. Financial services. First, what's my sphere of influence? So, as an actuary, I work in financial services. So I have the privilege of working with the Climate Financial Risk Forum, which is effectively UK regulators and a bunch of other kind of financial or policy initiatives. So my strong message to them is climate change risk assessment is unrealistic. We need to change it. We need to get to realistic risk assessment because we astonishingly, you rightly couldn't help laugh, but ministers of finance, the economic profession and financial services still haven't got the message that this could be bad news economically. So we have to get that. They have to get the cancer diagnosis. And then once we learn that, we then have to get into capital reallocation at scale, government subsidies, the AMOC, Greenland Ice Sheet, the Amazon, all these other systems which are absolutely, and critically, that mindset shift, we have to break out of this very narrow view of human progress as technological development and GDP growth, because we are not optimizing for progress, we are optimizing for extinction.
That sounds like a terrible way to end the show, but we have used up our time, and I like to end on an upper, and this is a downer,
Can I end on an upper then?
Okay.
Because inevitably this has been quite a risk-focused discussion, and that's the brand of actuaries. But I say this, and we say this in Parasol, our strong belief is that we do have agency here. We have enormous agency to work with nature, supercharge the transition. We can absolutely choose to change our economic system. We can absolutely work to increase albedo and mitigate. We don't. The future of tipping points is not written. We still have time to change course. But if we don't start to change course, we'll sooner or later run out of agency.
And my feeling is that we can be positive about the future because we've got things like the planetary solvency plan that Sandy is presenting, but we haven't yet done enough to advocate and share the scientific information and about the practical strategies that to achieve planetary stability and this new concept of planetary solvency, which I think is really important in linking our financial system with our natural systems. So I'd like to really warmly thank Sandy for your time in sharing with us about your work, and I look forward to seeing quick progress on further discussion about the things that you've.
He's going to turn it around for us. Okay, Sandy.
I will do my best.
Very, very grateful to you because this is fascinating and really very, very close to the key core of what has to be done.
Thanks, both.
Thanks. Bye.
Thank you very much, Sandy. Bye-bye.